Hello investors and future investors, welcome to the channel. In this video, I will be showing you how I make $200 weekly with this one option strategy, and I'm sure that you can too. If you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. Welcome to Investment Gains. Let's jump right into it. So, our strategy for today will be focused around the covered call. Now, a covered call is your ability to sell one contract against the stocks that you already own. In other words, in order for you to perform a covered call, you must already own the stocks. What I'm going to show you today is how I make $200 using two particular stocks. So let's get right into it. So our first stock for today is going to be Plug, ticker symbol PLUG. Now, so far, Plug has been trending up and it gives us some very nice premiums. So as usual, we're going to go into trade Plug options. We're going to wait for the options chain to load. Now we're going to select our strike date just 1 week out. So we're going to select the June 25th strike date. We're going to go over to sell and call because we're doing a covered call. And for purposes of this video, I'm going to be using the strike price of 32.5. Now for using 32.5, I'm going to be receiving $104 of premium. Now, like I say on most of my videos, the reason why I choose these strike prices is that I like to get a chance of profitability of 75% or higher. Now, to sell this call, I will be receiving $104 or $1.04. As you know, each option contract is multiplied by 100 shares. So you're going to continue. You choose your amount of contracts, which is 1, and there you go. Now immediately once I sell this call, I'm going to be receiving $104 into my Robinhood buying power. Now this money stays with me no matter how this trade goes. So I'm going to tell you how to win and how you lose this trade, but before we do that, let's jump into our second stock. So our second stock for today is going to be AMD, ticker symbol AMD. So as we jump into AMD and we wait for the options chain to load. So as usual, we go into trade AMD options. We choose a strike date just 1 week out, which is going to be June 25th. Make sure it says sell and call. And now we're going to choose the strike price of 83.5. Now I just explained why I choose the strike price. Now you could choose whichever strike price you want. That's all going to be based on your risk tolerance. So we go ahead, we hit continue. We hit 1 for the amount of contracts we want. There you have it. So this is the second stock, and for selling one contract of this stock, I'm going to be receiving $91. So the first one we received $104. This one we received $91. That's probably like $195, which is pretty close to $200. Now, how do you win? How do you lose with this trade? Okay, so this strategy is what I like to call a win-win strategy, and here is why. If at expiration on June 25th, AMD is trading at 83.5 or lower, then you get to keep your minimum credit and you also get your 100 shares collateral released back to you. Now, again, if on June 25th, AMD is trading above 83.5, then once again, you get to keep your minimum credit of $91, but now you're forced to sell 100 shares of AMD. So now you've lost your shares, but what you will have is $8,350 added to your buying power. So you did lose the shares, but now you have $8,000 into your buying power. That's why it's a win-win strategy. The most important thing for selling covered calls is that you must own 100 shares or more before you can sell a covered call. This strategy will also work for small accounts. You just need to find a stock that's trading at the price that is not too big for your portfolio. Now, when choosing your strike prices, like I said before, please choose a high probability of success, because the whole point here is to continue selling weekly calls in order to generate weekly revenue. Let's say on June 25th, the stock price goes above 83.5 and you do not want to sell your shares, then you have another option. One option that you can use is by rolling over your options. Now I do have videos on that. I'm going to link it above. Also, at expiration on June 25th, there's nothing that needs to be done on your end. Robinhood automatically exercises your option and does whatever it has to do. If your share price is trading above your strike price, then Robinhood is going to automatically sell it. If your share price is trading below 83.5, then Robinhood is automatically going to release your collateral back to you. Now, we have lots more strategies like this on this channel. So if you want to support the channel, like and subscribe and hit the notification bell to get an alert whenever I post a video. But most importantly, please share this video with someone you think that may benefit from this strategy. Thanks for watching, and remember, you never lose when taking your investment gains.